And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Guten Morgen. Wie ist das Market heute? Good morning and welcome everybody to the Market Prep for Thursday, May the 4th. My name is John Hoagland. Thanks for trusting me with your time as always. The only things we have in trading is context and risk management, and we have to remain patient in our trading. Happy Thursday, everyone. If you're already in the markets, hopefully you've got things going your way. It promises to be another exciting, thrilling, and challenging trading day in trading. So we've got some economic numbers already out this morning. The ECB rate decision came out as expected. They raised rates by 25 basis points. The trade balance lower than expected, 64.2 billion. They were looking for 63.3 billion, so a little deeper than expected. Jobless claims, initial jobless claims, was 2,000 higher than expected. They were looking for 240,000. It came out 242,000. However, the continuing jobless claims a lot lower than they were expecting. 1.865 million. It came out 1.805 million. So a considerable drop in continuing jobless claims. Productivity and cost, productivity lower, costs higher. Does anybody expect that? And then on 9:30 again, we have the 9:30 natural gas numbers due out. Don't forget, we are anticipating Apple after the close and unemployment numbers tomorrow. So after yesterday, it seems as though there's good news and bad news, right? The Fed is thinking maybe there'll be a pause in tightening, maybe. But they've also kind of waved around the R word, the recession word. And the recession word makes everybody a little bit nervous as far as investing is concerned. So good news, bad news. I like what Shaw says here. It seems the Fed has delivered an implicit choice for the market. Continue higher, you'll get another rate increase. Pull back, maybe you'll get some easing. So we got good news, bad news there. A little more bad news. Another West Coast bank, PacWest Bancorp, the latest lender to crack. Apparently they have they have been approached by, well, they're saying several potential partners and investors. Again, investors will be anticipating the Apple numbers after the close today. And crude prices continue to feel the crush of global economic slowdown. That was quite the open last night. I'm kind of viewing that as a little bit of a market aberration, a little bit of lack of liquidity. And it seems to have righted itself. So, haggle matters. I haven't looked yet, but I'm not sure that we're going to be seeing candles not updating with price in the MES. We'll check that out later during Make Hogue Money. Speaking of Make Hogue Money, I think we are going to have a special guest. Looking forward to seeing Casper, and we'll see what Casper has to say about these S&Ps today. All right. The VIX up a little bit here this morning, 4 or 5%, 1942 last I checked. It was 17.8 yesterday at this time. Dollar index up slightly, 101.4 on the day, but lower than this point yesterday, 101.62 yesterday at this time. And the yield on the 10-year also higher on the day, 3.37, but lower than it was yesterday at this time at 3.4%. Make sure you hit the lucky like button, share, comment, question, feedback, heckling, and love are always welcome. Make sure you subscribe to our YouTube channel so you get notified when we do go live. Good morning, everyone. I saw Scott Saw, and he conquered at the top of the list today. You win the prize. Bear goes long. Good morning. Lacey says good morning to everybody. My brother Rick Randolph, good to see you. I love you. Shaw, good morning. Yeah, I like that comment, Shaw. You know, it seems that if we go higher, they're gonna raise. We pull back a little bit, maybe they'll cut a little bit. Who knows what's going to happen? I wish I could see into the future because I would certainly tell all of you what was going to happen today, but nobody can do that, unfortunately. George, good morning. Das Wetter ist schon. Today it's very sunny. Going to be a little bit warmer. Haggle Matters, good morning. John, Will, good to see Timothy, Dan, Henry, Shy T, Grounds Hero. I got some coffee right here, Grounds Hero. Good morning, Bill Phillips. Jorge, what up, G? Good morning. Sarah Hall, good morning. Prayers and love to you as well. Pete, Trading Research, Rusty Golf for Nasdaq. Jason, good morning, Trading Research. Hit the like button, sure. It would be nice. Thank you very much. Anissa, Michael, Rich, Steven, Shane, Haggle Matters. Anyone have issues? I have not had the opportunity to look at the MES yet here, but I'm sure we're going to find out pretty soon here when we get into Make Hogue Money. Speaking of German, how do you get the umlaut over the O, George? I can't figure that out. JD, good morning. Yeah, what I draw from his talk is that they're going to keep an eye on the banks. Yeah, there's certainly a lot of pressure on a lot of those banks, right? Will, you're expanding my knowledge of German past what I already know there with that comment. I apologize. I did take German in high school, but that was a long time ago. CX, good morning. Confession to make, went on tilt with my personal account yesterday and lost 14%. Today is a new day, and we take it as a lesson learned. CX, sorry that happened yesterday to you, but it's happened to me. It's happened to pretty much everybody that has ever traded. You are not alone. Let go of the venom. Start slow, be patient, work your way back up. We don't like to see that happen to anybody, right? Vince, good morning. Travis, good morning. Haggle Matters. It's over the MES. Okay, well, we'll check that out. White House, I haven't seen anything in our support channel about any reports of that. Doesn't mean it's not happening. White House, good morning. Vlad. Caesar. Luke. Loving the YouTube shorts, by the way. Good. John, first day trying Top Step. Well, welcome. We're glad you're here. It's a much safer way and a much safer place to learn about trading, even if you're experienced or if you're new at it, you're in the right place. Andy, good morning, Shaw. Option U on a Mac. Umlaut. Oh, Deutsch. You guys are beyond my knowledge of German here already. James. Guten Morgen, I get. Guten Morgen, yes. Pre-market long, 4087. Yes, we will pray that guy. Patrick Whelan. Hey, let's go. How you doing, Patrick? Haven't seen you here before. Glad you're here. Looking forward to getting to know you a little bit. Mark. James. Tried to trade the FOMC yesterday and took an L2. Not doing that again. You know, these volatile periods in the market, it's been my experience, you either do really well or you just get killed. And, if I add up all the longs and shorts and everything that I've done during those volatile periods, I can tell you it's about even. So I don't play it anymore. I let the dust settle and then I get back into the markets when something makes sense to me. It's very difficult to trade those periods of time. And there are those that love it. They feel like they do really well during those periods of time, and that's good. It's just my choice to just watch, eat some popcorn, let things settle down, and then look for opportunities as the day goes on. Phil, good morning, Snowflake. Sarah, prayers to that guy. Yep. Rowan. I'm not sure how to pronounce that. Trading for Animals. Good afternoon. Good morning, I should say. Jason. Joe, good morning. Serenity. There you go. Wilson, Ronald, and Bear Goes Long. All right. Costume. Yeah, see? You should know better by now, but we keep trying, don't we? Eventually, you'll just say, you know what, I'm not going to do that anymore, and we're going to just watch. When we do Make Hope Money, we have an hour, right? And we're going to be hopefully expanding that soon. But I'm in a much longer time frame than it takes to find good opportunities in that 1 hour. Sometimes the market's just not there for me, and I have to wait till something comes to me later on in the day. But that is your time to see if we can find opportunities to make money, and we're going to see if we can make some money today. All right. So I think we've taken care of all the business here. Let's take a look at the markets. We've got some late spikes here in the equities, and that might be able to provide some decent context for us. Let's take a look. So here's the S&Ps. Here's the daily chart. We've pretty much enveloped the weekly range today with the weekly kickoff levels that I calculate those on Fridays, and we tested within a tick of it here. We tested to it last night, went through it by a couple of bucks, but that was during the regular trading hours. So the weekly kickoff level is pretty useful so far this week. We went high to low and tested both. One in regular trading hours, one in the overnight hours. So yesterday was the first open interest increase in 3 days. We lost open interest here. We lost open interest here, gained a little bit of open interest here, 5,500. That's not a big number for the S&Ps. Excuse me, I apologize. I seem to have some sort of a cold thing that just won't give up on me, and I apologize for that. So volume was okay yesterday. It wasn't great in futures. New York Stock Exchange did 4.2 billion shares, a little bit higher than the previous day, where futures was a little bit lower than yesterday. So what kind of an grade would we give this downside auction? It started by losing open interest. It gained a little bit of open interest yesterday. I'm looking at it as kind of in a short time frame, I'm giving it a B-, but where is it? We're still largely range bound on the daily chart, where we have been for about a month. Let's start looking at the 30-minute chart. Morning, JT. So here's our test of weekly kickoff high. Here's our test of weekly kickoff high weekly kickoff low last night. Where's the market? Well, it's looking like it's going to open with a gap, but we opened here. We're here now. Are we holding longs in the overnight? I'm going to go with probably not. I think there's been enough gyration here in the overnight session to kind of even out any inventory that probably got too long up here. We've now reconciled all of that. We're going to be opening with a gap, so gap rules are in play. How about a nice test of the overnight low? Weekly kickoff low might be an interesting opportunity for us today. Look at the TPO chart. We've got a two-stage late spike that occurred yesterday. What's a late spike again? Well, the market was rotational for the better part of the day, and at the end of the day, price moved away from balance and closed away from balance without giving the market time to show acceptance through time at these lower levels. So we look at these late spikes, and we say, well, if we open above the late spike, that's kind of rejection of lower pricing. That would leave this as an excess low. Opening in the late spike is a secondary possible acceptance of lower pricing, and opening below the late spike is a higher potential acceptance of lower pricing. Well, the way it looks now, we're opening with the gap and we're opening below the late spike. So I'm going to be probably thinking that the market is accepting lower pricing and looking for opportunities to sell strength. Where are opportunities to sell strength? Well, if we do come back and close the gap, the base of the late spike M base is 41.1475. The base of the L breakout from balance is all the way up here at 41.3050. So there's kind of a two-stage late spike where opportunities for executions can come in either of these. Do you take this one, manage your risk tightly? If kind of price continues above it, you take this one when you can also manage risk relatively cleanly against both of those levels. We're going to be in make hog money on the open here if we can get through the prep relatively soon here. And, what if the opening range is the high of the session? The opening range is the high of the session. We're opening below the late spike. That would also be a good nuance that says, yeah, price is accepting price at lower levels and is continuing to seek two-sided trade at lower levels. The market's job is to facilitate trade. If it's not facilitating trade, it's going to move to another level to see if we can find equilibrium or even buyers or sellers. Balance. The market goes from balance to breakout to continuation to balance. So we're going to be looking for probably some shorting opportunities here with the S&Ps opening below that late spike. Here's crude oil. I don't know what happened on the open last night. I'm kind of viewing it as a bit of an aberration, a low liquidity event. This is the first drop in open interest that we've seen in 5 days on this push below weekly kickoff low. We lost 26,000 in open interest. Okay. Yeah. Nick, you just kind of reminded me to kind of look at this as, we may be a little bit short down here, but with the open interest in the S&Ps losing open interest here and adding just a little bit of open interest, it makes me wonder if we are really short up the wazoo, like you said. This weekly kickoff level is an area where I'm going to be looking for longer time frame traders to adjust inventory. If we don't bring new business below that level, then if we are short, we could see this market really kind of take out that late spike and go to the upside. But we're looking for context and reference, and if we do leave the opening range at the high of the session, there's a couple of nuances that say this market is likely to continue to the downside. All right, now let's take a look at crude oil. We broke out below the weekly kickoff low here on losing open interest. We gained open interest for 5 days. We lost open interest. We've squeezed out the last of the longs, I think, here. We're giving the auction grade, which was, I think, an A yesterday, a B- today because we lost open interest. Volume was good, but we lost open interest. We didn't bring new business below the weekly kickoff low. We got out of old business. The swing low here looks like an interesting spot for a possible execution today if given the opportunity. That swing low is 64.58. So this loss in open interest that occurred yesterday can be kind of a warning shot to the downside auction. Is it tiring? Is it getting too cheap? Take a look at the 30-minute chart. Settlement is here for 68.60. Here's our open last night. low liquidity aberration I'm looking at. I don't know what happened. I didn't have a chance to really look into that much, but now we've opened. We're no overnight inventory, no gap, no runs, no hits, no errors. Stay patient. We're trading right at settlement. I'm going to be looking for opportunities as the day goes on. We find typically, and it's not every time, but quite often some of the better trade locations come later in the session when we open inside range and value. Here's the TPO chart. So it was a normal variation day yesterday. The IB high was the high of the regular trading hours session. Very even bell curve, very just a normal two-sided trading day yesterday. Makes sense that maybe we lost a little bit of open interest. There was no direction to this. There was an evening of inventory instead of an increase in inventory. And again, we're in range in value. I'll look for trades as the day goes on. Again, quite often, best trade locations occur later in the day when we open in range and in value. Nasdaq is holding up far better than the S&Ps. We kind of opened yesterday in the center of the range, and we're still here in the center of the range. The S&Ps are all the way down to weekly kickoff low. What did we do as far as open interest? Well, we added 2,000 in open interest yesterday, and that's okay. Volume was just okay. It wasn't tremendous. But now we're still really range bound here. We're not near any of the kind of medium or longer time frame extremes on the daily chart like we are in the S&Ps. We're kind of looking at the downside auction here as not really performing all that well, is it? 30-minute chart. Settlement, 13,100.75. Opened here, got too long. We're basically flat as far as inventory is concerned. Less of a chance of opening flat out below the late spike that occurred here. Looks like we're probably not going to open with a gap. As a matter of fact, the market may actually open higher. Looking at this morning, I was calling the market, kind of steady, and it seems to be the truth when it comes to the Nasdaq right now. So, opening in the late spike is a secondary acceptance of lower pricing. The overnight high is right at the secondary base for the late spike. Let's take a look at the TPO chart because we can see it there. So here's the late spike. Okay, the L base for this late spike is 13,169. The M base 13,120. So pretty close to the L base here in the overnight. And maybe not opening with that gap kind of eases some of the probability of acceptance of lower pricing. What about gold? We had an aberration in gold last night as well. Open interest adding 11,000. Open interest continues strong. Volume was off just a little bit. Still giving the upside auction, a grade of B plus because we keep adding open interest on this breakout, at this breakout and on this breakout. This swing high up here looks like an interesting visual target for regular trading hour session. That high is 2063.40. And again, the auction grade, we're giving a B plus here. We've got overlapping to higher overnight range. Here's the 30-minute chart. Settlement here, opened here, trading here. If there is an overnight inventory, it might actually be a little bit short, which is kind of strange because we're opening or did open with a gap. We've been unable to close that gap. That to me is a nuance that says, if we can't close that gap relatively early, we're looking for opportunities to buy weakness. Even a close of the gap could end up being supportive. Take a look at the TPO chart. So here's our gap. 730 numbers left some teeth. But if we can't close this gap relatively early, we could range here or we could continue to the upside. So I'm looking for right now opportunities to buy weakness when I can limit risk. It's always about when I can limit risk and where can I limit risk. We don't know what's going to happen. All we know is we need to be able to party tomorrow. We need to be able to be here for the next opportunity. We're looking for asymmetric opportunities. If it's a cheap trade, I'm probably going to take it as long as I can realize or with probability or, with reasonable and probable opportunities to make twice what I'm looking to risk on any trade, asymmetric opportunities. Here's the euro, range bound. We haven't had any breakout above any shorter time frame extremes. We're up against that extreme. We were earlier. So we're still really range bound. It's still an upside digestion market. So shorts, I'm probably going to be a little bit more reasonable in profit targets than I am longs against the lows here. Because again, we're looking at an upside digestion. Breaking weekly kickoff low and accepting below it, of course, changes everything as far as that's concerned. I don't think we're going to be near there today. So here's the euro gap, continuation, FOMC, craziness. The ECB raised rates, so we're seeing a nice little gyration here. We closed the gap from yesterday on that, traded right to settlement. Now the market seems to be recovering back to value from yesterday. This is it's so amazing how markets make perfect sense in hindsight. But if you tried to trade this, it would have been a very difficult trade to make. So we added 6,000 in open interest on this push to the upside. That's probably new business. They're probably going to be protecting this level. Back to the 30-minute chart here. We're back in range, back in value. I would be really kind of looking for the extremes to do anything here. Our overnight high and our current regular trading hour session low look like interesting spots, and we're right in the middle of it, so I'm not going to be doing anything here. Here's the TPO chart from yesterday. This is not a late spike. This is excess. Excess. So, if this has been proven too expensive for now, we're looking to sell up in this area of excess, which our overnight high is right there. Here's the 10-year. So, breakout to the upside yesterday. Volume wasn't great, but we added 31,000, which isn't a big number for the 10-year. Kind of looking at this breakout or continuation grade of a B minus, because we did add open interest, but volume was lower. Swing high up here looks like an interesting area for a possible execution. We may find a couple of fish there. 117.01 and a half ticks. We've already seen the market pull off the high here. If you take a look at the 30. Overnight high, maybe getting a little bit short here, seeing some continuation back into range and value. Weekly kickoff low certainly looks like an interesting area for an execution. We'll have to see if we get that opportunity. Here's the TPO. Again, this is not a late spike. This is excess. We took out that excess and we seem to be coming back. What about the nat gas? Well, we broke out below weekly kickoff low yesterday after finding support there the day before. We added 11,000 in open interest, and volume was just but we did bring in new business below an important inflection level. So we're thinking about potential continuation. Here's the day yesterday. Just took out this naked point of control, turned around, settled relatively well. We did put in another poor low yesterday. We had a poor low the day before that. We had a poor low the day before that. The downside auction is showing signs of not being complete yet. We've got excess on the highs, weak lows. We're in range, in value. Overnight high looks interesting, of course. But inside value, I'm doing nothing. I'm thankful that I don't trade this market because it is such a wily beast. So here in the profiles, you can see it's a normal variation day. The IB is the high of the session. Look at all the weak lows. Weak low, weak low, weak low. Excess high, excess high, excess high, and excess high. Finished upside auctions, unfinished downside auctions. So, all right. I see you, Rusty. Let me get that link for everybody. If you want to join the Zoom meeting for Make Hogue Money, here is the link. Yeah, let me grab that for you. And here it is. And again, you don't have to join the Zoom meeting. You can watch it here on YouTube, but an excess high is what we call a selling tail, Charles. I'll show you. We'll show you on that chart, the nat gas. So this is a selling tail. Price got too expensive. Buyers back off, sellers take over, and you leave this long line of short time frame tail up here. If we split this, you can see the market pretty much opened up here, put in that high, and then broke quickly. This is a 30-minute range. So the market got too expensive, didn't spend any time. Sellers took over and pushed price lower. That is an excess high. Good question. All right, let's take our deep breath. We're going to stay humble, grateful, and creative in our trading today. And don't forget, stay centered. You start to go on tilt, you're better off walking away. And we'll see you for Make Hogue Money. If not, have a great trading day. The podcast is at the end of the day today. I'm not sure they're going to be doing one. If not, maybe I'll do a reflection at the end of the day to see what ended up happening today. And but we'll see you tomorrow morning if I don't see you at Make Hogue Money. So trade well today. Be kind to yourself and others. Say a prayer for peace. And we will see you soon.